So thank you to everyone joining us today. This event is the next in our Global Business Club webinar series, and today we are focusing on getting paid and risk mitigation for your experts, featuring our speaker, Mariel Huasanga, who is the Central Regional Director with EXIM Bank. So just to share a little bit about the International Business Center at Michigan State University. So we have been designated as a National Resource Center by the U.S. Department of Education since 1990 as part of a CIBER grant program. And the IBC has been serving the international business community for over 30 years as one of these 15 CIBERs all across the country. Our main mission is to help provide superior education, research, and assistance to businesses, public policy makers, academics, and students on international business and trade. One of the many ways that we do that is through our Global Business Club program. So the Global Business Club serves as a bridge linking Michigan exporters and allies with a wealth of research-driven resources. Our main two programs are the Market Spotlight Series, which is a series of yearly in-person events held around the state of Michigan that focus on different global markets. Each event features market overviews, a panel of business representatives who will share experiences and best practices for the market, and provides opportunities for networking. Separately, we hold a series of different educational webinars, such as the event you're attending right now. To learn more about us, feel free to follow the Global Business Club on LinkedIn or to visit our website. Now I'd like to introduce our speaker, Mariel. So Mariel is the Central Regional Director with the Export-Import Bank of the United States. In this role, she supports U.S. exporters in Michigan, Wisconsin, North Dakota, South Dakota, Illinois, Kansas, Missouri, Ohio, Iowa, and Indiana. Just a little busy. Prior to joining EXIM, Mariel served as the director for the Illinois Small Business Development Center, SBDC, as well as the International Trade Center. We're delighted to have her here with us today. Thank you so much.
Right, thank you.
Mm-hmm.
So I'm going to go ahead and share my screen. All right. Hannah, is it looking good?
Mm-hmm.
All right, perfect. Thank you. All right. Good morning, everybody. Thank you again for joining us today. It's my pleasure to give you an overview of what we do here at EXIM, but also talk to you a little bit more about what is involved in the payment part of an export transaction, and obviously the risks that are involved and how you can mitigate those risks and make sure that you always get paid whenever you're involved in an international sale. As Hannah said, my name is Mariel Huasanga. I'm the regional director for EXIM Bank, served the central region, currently about 12 states, most of the Midwest. I'm based here in Michigan, so actually in Detroit. So if any of you would be interested in discussing your needs on a one-on-one environment, I'll be more than happy to meet with you and chat about how we can help you. But either way, I'm always reachable via email or by phone, so feel free to take note of my contact information. I believe this deck will be also shared later after the presentation, so you have it on hand. So a little bit about us, the Export-Import Bank in the United States. We're a U.S. federal government agency. We're an independent agency. And also we are the official export credit insurance agency of the United States. Every major economy has an EXIM bank. For example, China, Canada, and multiple countries in Europe. So it's known what we do and how we add value to the exports on every country, right? So here at EXIM, we were established in 1934, so we just turned 90 years in February. It's a huge celebration. We're headquarters in Washington, D.C. However, we have 12 regional offices all around the U.S. As mentioned, I am the one running the office in Michigan, covering most of the north part. We have offices there in in Texas, in Florida, in California, Seattle, etc. So our mission is to facilitate U.S. jobs by supporting the growth of American exports. So we're here to not compete with the private sector. However, we're going to be here filling the gap and complemented private sector financing. So the idea of EXIM is we are here to level the playing field for more U.S. companies that not only compete for global sales, but also have a competitive advantage and be able to win sales whenever they are selling abroad. So this is a quick snapshot about how EXIM can assist you. So by ensuring your receivables for international sales, we allow you to be more competitive when selling abroad. It's known that the global marketplace right now, it's extremely competitive. You not only are going against other suppliers from the US, but also you're competing with local suppliers in your target market and other foreign suppliers. So they're all trying to get that big sale for their own business, right? And they're all using their own resources, either provided by their own governments or states, etc., for them to allow to be more flexible in how they take payments. Because just like you manage when you're buying anything from your own suppliers, right? In order to unlock some more cash flow, you are going to ask them to give you 30, 60, 90 days to pay because it allows you enough time, to get those goods and use them to manufacture your product. So it's similar for your foreign buyer. So by allowing them to have some terms to pay, giving them some credit, actually you'll help them also build their business. So as they build their business, and if they see that you are a company that they can work with, that is flexible, that it's a good partner for them, they're going to continue buying from you. So their growth actually benefits you because it allows you to get more sales and more orders from them. So the idea here is that we want to make sure that you're not missing out on opportunities to sell more, not only in terms of quantity and volume, but also to sell to more buyers abroad. So the idea here is we will protect you. We will protect those foreign receivables, so you can go ahead and offer open accounts to your buyers. And knowing that in case they don't pay, you can always come to us and we will pay you up to a 95%. And we'll discuss that in more detail later on. Another way we can assist you is by obtaining pre-export working capital financing. So we have a working capital loan guarantee that allows you to borrow so you can go ahead and purchase more components, raw materials that you need to manufacture and fulfill those larger export orders. We can also support capital equipment exports with term loans for international buyers, and that's what we call our medium-term financing or foreign buyer financing. And that's basically EXIM providing guarantee to a U.S. lender so they can provide a loan to that foreign buyer. The foreign buyer then benefits from having the financing they need to buy from you at U.S. market interest rates, which more often than not, that's going to be much cheaper to what they can get in their own country. So for example, in many countries in Latam, like Peru and Brazil, their interest rates are a little bit over 15 to 20%. So that can be pretty high, especially if you're looking for large amounts in terms of financing. So for those type of needs, your foreign buyer would highly benefit from working with us because they can get a lower interest rate to what they can get in their own countries, and also up to 5 years to pay back that loan. And the benefit for you as the exporters that you get, you make the sale, you get your money. You don't need to deal with offering financing to your buyer on your own. You have us and our delegated authority lenders taking care of that. Overall, we exist so you can export more. because by exporting more, not only you're helping the economy, but also you're creating better paying jobs. And that's ultimately what our mission and goal is. So to today's topic, getting paid and mitigating risk. So, the main reason why many companies, especially small businesses, are a little bit reluctant to even start exporting, even if they might get some unsolicited inquiries from foreign buyers. They just say, "Hey, it's too difficult. What if I don't get paid?" Right? It's the main thing. So they just want to focus on domestic, or those that are starting to export are very reluctant to offer open account terms, some type of credit. They just want to get paid 100% cash in advance before they even ship the goods, right? So again, the main issue here for all the situations is the fear of not getting paid, the risk, right? So here's some exporting myth that you might you might have heard or you might share, um, especially small businesses that are just starting to drive more international interest. They might say, "Hey, my domestic sales are quite strong. I don't need to export." However, while you don't need to, it's going to actually help a lot, especially if the U.S. economy endures difficult times in the future, right? No economies is actually exempt of having some difficulties, right? So the idea here is, you are better equipped to respond to market fluctuations and economy problems if you have market diversification. So the idea is that you not only rely on domestic sales, but you also have some foreign sales that will remain somewhat stable if your domestic sales, for some reason, suffer a hit. So the idea here is that we want your business to be sustainable. The other exporting myth is, you might think that your business is too small. You have a 1, 2, or 3 people small business, and you're thinking, well, I don't. It's not something that another buyer, a buyer abroad, would be interested, or I don't have the capacity of the knowledge. Well, actually, just like you, 42% of small business exporters have fewer than 19 employees. I personally, in my role at EXIM, I work with companies that have 3, 4, 5 employees, and they are exporting and being successful. Another, important fact to mention is that in most cases, the profit margin that you can get for your export sales is much higher than what you can get for domestic. So that's one benefit too. And the other benefit is the cash flow. So most of the time, a foreign buyer is going to ask for a larger order than probably your domestic buyer, just because they want to make sure that the shipping cost doesn't really offset too much of the whole cost. So if they order in a larger volume, then it's much cheaper if you actually factor in the logistical cost for them. So most of the time they're going to make a larger order. So that's also pretty positive for you, especially if you're a small business. Another risk that we have is, like I mentioned, the risk of getting paid. And that's what we're here. We're going to be able to support that, so you can, have the peace of mind to make that sale happen, and without fearing of your buyer defaulting. And probably the most common reason, it's just a small business, 1, 2, 3 people, like I mentioned. These people are wearing multiple hats, right? So you have the owner not only doing the admin work, but also taking care of the financials and the operations. So it might be too overwhelming, and they might not know what is the next step and how to get it started. Or they might even want to export, but they don't know what would be, who would be interested, or who would want to buy my products. How do I find these foreign buyers? So that's why we're here. We have a pretty strong network of state and federal organization, and also, private organizations like the Global Business Club that are just here to do this, to help you get started, to ensure that you have all the tools available to be successful when you are exporting. So you can get started, by just giving us a call here at EXIM, and we will make sure to point you out to the resources that you have available to find new foreign buyers, to make use of the STEP grant for promotional activities in international markets, to maybe go into a trade mission with the state of Michigan. So we will point you out in the right direction. If you need just initial advice on how to build an export plan, we will point you out with the Small Business Development Center that's closest to you. So I think the biggest benefit in Michigan, at least, is that we are a very close-knit ecosystem of trade partners. So we all know each other. We all coordinate pretty well. And the idea here is that we know what everybody does. So whenever we talk to you and we hear what your needs are, we'll tell you, okay, so this is how we can help you. But in this other need, there's another trade partner that can help you, and so on. So that's a big a big benefit. We're all working for your advantage, for your export success. So these are common export challenges that you will face as you start your journey or even growing your exports. So as you get larger orders from foreign buyers, you're going to probably need a little bit more money to buy more raw materials, buy more components, even hire more people, anything that involves in working capital for you to fulfill those orders. And that's a way we can help as well. Like I mentioned before, we can guarantee a credit line so you are able to get the financing you need to fulfill new orders. Another export challenge is, your buyer can tell you either right away, hey, can you give me, some type of credit, 30 days, 45 days, 60 days to pay, maybe not in the full amount of the invoice, but maybe just, they want to give you 50% in advance and then want you to have some 50% of credit. In those type of cases, that's when you come to us. We can ensure that remaining amount that you're given on credit, so we're offsetting the risk for you. Another export challenge is, okay, so I'll give them credit. What if I don't get paid? And again, that export credit insurance product will have your back, because if they don't pay, you come to us, file a claim, and we'll pay you up to 95% of that receivable. So we're not only covering you for that commercial risk, which is basically, the issue of defaulting from your buyer for any reason, but also we're covering you for political risk. And a political risk is basically, insurrection, war, currency exchange, cancellations of licenses, anything that may happen that is not directly due to the exporter, but it's mostly the political environment that they are in. And another challenge that you may face, especially if you export capital equipment, is, this buyer from abroad is coming and they want to do a $6 million purchase, but it's, evidently they will want some financing. They'll want, some time to pay, some years to pay for that large amount of money, right? So in those type of cases, like I mentioned before, we can assist. We can support the financing by U.S. commercial lenders to international buyers so they can purchase that capital equipment for you. And like I said, they can have up to 5 years to pay for that. So it's a win-win for the buyer. And obviously, our ultimate goal is that you can make that sale. So diving a little bit in detail about payment terms and payment methods. So when you sell to foreign buyers, it's going to be a little bit pretty similar to what you do domestically. Just you give them some credit or you get cash in advance. However, we're going to do a couple of tools also that are involve in international sales, like letters of credit and cash against documents. And I'm going to dive a little bit deeper about each one of these so you can better understand them. So cash in advance, just like what the name says, you get prepaid before you even ship the goods. So it's extremely low risk for you because you're getting your money before you even ship the product. So there's no way that they are not paying you, right? Obviously, the whole risk is being carried by the buyer. Now, in cash in advance, I as experience I had before an international trade center director, I talked to some business that would get prepaid, and sometimes they will take credit card payments. Especially to those new exporters, I would make sure that you guys are well aware of those type of methods whenever you're getting prepaid. So if it's like a $5,000, $6,000 sale, credit card payment, it has some risk just because there might be some fraud involved on that. And that's not uncommon nowadays, unfortunately. So for example, they can make the payment via credit card. You can get the money in your bank account, and then that credit that sale might be reported as a fraudulent transaction, and then you're out of that. So make sure that you also evaluate all the ways that you're getting paid whenever that is a prepaid transaction, right? Most of the time, I would encourage you to have a bank involved in that. So wire transfer, etc. So just be mindful of that. There can be some, obviously, just like in any transaction, there might be some risk of fraudulent transactions going out there. Just be mindful. So again, in cash in advance, higher risk for the buyer, no risk for you, basically. However, if you put yourself in your buyer's perspective, they're paying you 100% for something they haven't even received. And it's probably going to take a couple of weeks and even a month or so, depending where they are, to get that product, to see if you actually sent what you were supposed to. So, there are going to be buyers, especially those with a high power of purchase, those larger companies, that will probably, say, well, you're going to only offer to take my purchase if I pay you 100% in advance. Then there are supplier A, B, and C from these other countries that are offering me some flexibility, so they might go with them, and you lose your sale. So that's the biggest trade-off whenever you're requiring prepaid. So other methods that are safe for both seller and buyer are letters of credit and cash against documents. So letter of credit it's a bank tool, right? So you get in a bank involved in the U.S. and in the buyer's country, and it's a complex document, and it's not for everybody, and it's not for every transaction either. So a letter of credit is actually initiated and requested at your buyer's bank. So it's not something that you open here in the U.S. So it's your buyer that needs to open it with their own bank, right? So the idea is, this bank holds the money until you, through your advising bank here in the U.S., provide the documents that show that you actually ship the goods, and they must be very well made. They must follow all the conditions of the letter of credit. Even a comma in the wrong place can make that a very challenging process. So letters of credit are documents that are the type of payment method that you really need to have a good advisor if you're not experienced on that is helping you, whether it's within your bank or an external advisor. because it can be delayed if there are, like I said, some mistakes, typos or something like that. So, if all the documents look good, then the bank of your buyer will send the funds to your bank here in the US, and your bank will, pay you. So yeah, it's definitely safe. You are getting paid for sure because you have a bank that has the money, and then your buyer is ensuring that you actually ship the products. However, in letters of credit, there are two types. And without diving into a lot of detail on that, I'm just going to briefly simplify it. So we got unconfirmed and confirmed letters of credit. For unconfirmed or outside letters of credit, you would just have a bank here in the US that checks the documents. And if the bank in your buyer's country actually has the money and sends the money, they will just wire it to you. However, if the bank in the foreign country, for some reason, has a problem, and there's a financial whole fall of a financial sector or anything like that that could happen, and they don't send the money to your bank here in the US, you're not getting the money anyway. Because the bank here in the US that you're working with is only advising. It's only basically handling documents and money, but it's not adding their own responsibility to pay you if they don't get the money from the bank of your buyer. So that's the risk. There's always the political component, right? And then you got confirmed letters of credit, in which then you add an extra level of protection because you have a US bank confirming that letter of credit, adding their responsibility that no matter what, they will pay you if you fulfill all the requirements of the letter of credit. So if the bank and the buyer cannot send the funds or something happens, then still that bank in the US will fulfill their commitment for the full amount stated on the letter of credit. So obviously, a letter of credit that is confirmed is going to be much more expensive, right, than a letter of credit that is outside. And overall, this is a tool that it's not cheap. So if you're just doing a couple of $1,000s, it might not be the best option for you. So it is there, it exists. So and we will be happy to point you out to to banks that can can help you with this if that's of your interest. However, I'm going to explain a little bit more about other payment methods that you can use that are much simpler. So then you have cash against documents, something similar to letters of credit. If there's a bank involved, it's going to be documentary collections. So again, then you don't have a confirmation bank, you don't have an advising bank. So it's basically, if you present the documents, you present basically your bill of lading that shows that you shipped the goods, then you get your money then. Still, like I said, some level of risk there. And finally, we have open account. Just basically what you would do in a domestic transaction, just giving credit, right, to your buyer. So it can be net 30, net 15, net 60, you name it. Obviously, in that type of payment term, you are actually carrying most of the risk because, if after the X amount of days that you're giving them to pay, your buyer doesn't pay you, then you have to collect that. You got to find ways to get your money back. And when you're dealing with international buyers, that can get tricky because then you probably going to be thinking, okay, I need to get a lawyer because I need to sue them in their local court of law. And that can be expensive because you don't even know probably a lot of that foreign market, probably never been. So yeah, sometimes they might not even speak the same language. So it can be overwhelming. And definitely if you were just sending something $2,000, $3,000, you just, it's going to be more expensive to hire a collections agency. So you just, write it off at bad debt, but it's a loss, right? And for a small business, $2,000, $3,000 can actually hit you quite hard, right? So the idea here is, how do we, how can we help you make that sale, make it simple, just like if you were giving credit to a domestic buyer, but without the risk of, having to handle all the collections and all that, and just, make sure that you make your sale, have the peace of mind that if your buyer doesn't pay you, you're covered. So obviously, if you take the risk off, then that becomes a low risk transaction for you. And that's also a low risk transaction for your buyer. So that's a sweet spot. That's a win for you and a win for the buyer. And that's how you make a successful sale. So an export credit insurance is an insurance policy that will cover those foreign receivables. And you're going to get protected against non-payment by those foreign buyers when you offer them open account terms. So key benefits, you're going to be more competitive. You're going to offer them credit terms. You're not going to require them to use a letter of credit that can, like I said, can be complex, can be, expensive. And you're not going to get asked them to prepay, which definitely that's high risk for the buyer. So that will put you in a much better competitive position, especially against other suppliers that your buyer might be negotiating with. And another key benefit is that you will be able to use those insured foreign receivables as collateral to work with your current lender and obtain a working capital loan or obtain a higher line of credit. Because otherwise, if you are offering open account terms and you have foreign receivables that are not insured, no lender will touch them as part of collateral. So an additional benefit is just that you will be able to expand your borrowing base, borrow against those insured foreign receivables. And that's not with us necessarily. That can be with any lender that you're working with. We don't need to be directly involved with that lender. So like I said, key benefits of risk protection. We're mitigating commercial and political risk, sales tool, allowing you to be more competitive, and finance and aid, allowing you to borrow against those receivables. So what is covered when you have an export credit insurance policy? We cover both commercial and political risk. And commercial risk is anything related to your buyer's insolvency, bankruptcy, or pre-traded default. And that means, if your buyer gets very delayed on their own receivables and they can pay you, or they for some reason have some outstanding financial problems that won't allow them to get the money to pay you, or they filing for bankruptcy. So anything like that we can cover. A political risk is just country risk, right? So war, revolution, insurrection, currency transfer risk. So for example, your invoices in U.S. dollars and your buyer's country's currency is not U.S. dollars, which is most of the time, except for Ecuador. Then they might be having some issues converting their currency to US dollars and getting US dollars to pay you, right? So in those type of cases, that's what we call currency transfer. So that's also covered. And another risk is the cancellation of import or export license. So for example, if your product specifically requires a license from the government in your foreign buyer's country in order to be cleared from customs to actually enter into the country, then you have the risk, right? Because you don't know when your foreign buyer's country can say, yeah, we're canceling this license, or we're not allowing this product to be entered into our country anymore, or any reasons, right? So we're also covering that. There's one thing that no export credit insurance policy will cover, and that's a commercial dispute. And that's basically, your purchase order saying that you should be sending 1,000 units of a specific device and you only send 500. That's definitely something that is out of our control, and that's completely on you to ensure that you're sending the specific products, to the conditions and the characteristics and the amount that is on your purchase order. So make sure, and that's an advice on this, make sure that you take the necessary precautions to document and have everything register, so your buyer cannot say that they are not paying you because they are disputing something. So if you're sure that you sent 1,000 units of a certain device and you actually did send that, make sure you have something that can prove that. So your buyer can say, well, I already received 900, right? So that's and you'll get more experience on that as you continue exporting. So there are even some certificates of inspections that happen at ports. So there are multiple ways. But again, most of the buyers, they're we're going to be qualifying them for credit. So we're going to be seeing if they, have been good at paying other suppliers, especially in the US. So, if they passed the credit standards and they're approved by EXIM, it's very unlikely that they're going to try to, not be very ethical in their business practices. So, but it's always something to keep in mind. So it's always good to have that type of advice and kind of know what the risks are. So this is how export credit insurance works. So you identify an international buyer, and then you obtain an export credit insurance policy. And for that purpose, if you're interested in, just submit an application with us, it's no cost to get a quote. You can feel free to call me or send me an email, and we can get you started with the process. So once we have that, and we actually have approved that buyer, you go ahead and offer them credit terms to pay in, like I said, net 30, net 45, net 60, net 90, whatever you decide. They accept the deal, then you ship your product, you invoice the buyer, you'll report those shipments and pay the premium for the amount shipped. And this is very important because EXIM export credit insurance is pay as you go. Compared to private sector export credit insurance, we won't ask you to pay anything in advance. So if you report a shipment, then is when you pay your premium. If you didn't make an eligible shipment, you would just report zero, so there's nothing to pay. There's no maintenance fee, there's no deductible in most of our policies. So we want to make it as easier for you to make those sales happen. So once you have paid your premium, you're covered on that invoice, then your buyer pays you, we're good. If they don't pay you, then you come to us, file a claim, and we will pay. So you're not going to be concerned about handling your collections or anything like that. You just come to us with a purchase order, with an invoice, bill of lading, or a document of transport, could be an airway bill as well. And with one collection attempt, and that could be in the shape of an email that you can send to your contact in the buyer's company, say, hey, this invoice is past due, please fulfill your commitment as soon as possible. That's sufficient for us. You come to us, file a claim, we'll pay you up to 95% of that once that claim is processed. And you're good to go. So this is just, I'm not going to dive in too much detail in terms of our policies, because that's a conversation that we can have individually. However, just know that we have, these type of policies that are created to meet your needs. So we have a multi-buyer policy that's just like an umbrella policy in which we're covering your whole portfolio of international sales and terms. You get in the highest of our coverage, which is 95%. There's no deductible for small business policies. So yes, we have one policy specially created for small businesses, and that's that's probably going to be really, really good for you, easy to navigate. Premiums are already based on a set schedule, so you won't have to kind of guess based on country risk or anything like that. It's going to be given. So that allows you to have more predictability, because most of the time what exporters do is when they know the premium of what they're going to pay based on based on the invoice, then they actually use that and build it into the cost that they pass to their foreign buyer. And that's the idea. So you don't have to pay. You're giving financing to your buyer, right? So you shouldn't have to pay the premium. So just pass it to the buyer. It's a common practice. So like I said, it's pay as you go. You pay your premium when you report the shipment. And you might be given some delegated authority, some approval authority, buyer approval authority. So basically, for up to a certain amount for a certain buyer, you can approve certain transactions, certain credit transactions in-house to make it easier for you. We also have a multi-buyer select risk, in which we are actually not covering your whole portfolio, but only those buyers that you believe are higher risk for you, right? And again, 95% coverage as well, pay as you go. Then in those type of cases, the premiums will actually be calculated based on your portfolio, and underwriting here. EXIM will be able to provide more detail on that once you submit your application. And then finally, we have a single buyer policy, and that's what you want to have if you only want to insure one buyer. So if you much rather only put a policy on a particular buyer that you believe is the highest risk for you, then that's perfectly fine. Coverage is a little bit less compared to multi-buyer, just because of the spread of risk. It's going to be 90%. There's no deductible, and your premium will be based on the payment terms and the country risk of where your buyer is located. So here's some eligibility criteria to work with us and submit an application for export credit insurance. We want your company to at least have 3 years operating history and a positive net worth and be profitable. So companies that are younger than that might not be prepared to start exporting, but on a general terms, right? So there are cases in which we have worked with companies that are 1-2 years into their operating history and they're fine. So if that's your case, I will still want to have the conversation, see if you would qualify. The products must be shipped from the U.S. We also cover services. So in this case, the services must be provided from the U.S. with more than 50% content, or at least 51% U.S. content. And that includes labor, components, raw materials, overhead, but it does not include markup or profit. So we support exports of all goods and services, like I mentioned, in all industry. However, we're very limited with military and defense related. We have a couple of waivers there, but in general terms, we cannot support defense or military. We're open in 180 plus countries. There are certain countries in which we're not doing business for risk reasons. Like, for example, Argentina, we're completely closed for business there because of the currency transfer issue. So it's always a good practice to check our country limitation schedule. And that's a tool that we have available on our website, exim.gov. And it's just like you see here on the screen. It's a scroll down menu. You pick up a country in which your buyer, where your buyer is located, and you can see if we're supporting it or we have limits or we're completely not open for business there. So it's a very interactive tool and very easy to use. So what do we need from your buyer in order to qualify them for credit and put them in your export credit insurance policy? So up to $100,000 of credit limit that you want to give to your buyer, which is going to be in most cases what the bucket that most small businesses are willing to give, less than 100K of credit to their buyers. You're only going to need a trade reference, and that's just and we have a copy of that, FYI. And it's just a one-page document that states what is this other, preferably U.S. supplier that this buyer is buying from, that is also giving them credit for a similar amount and similar terms that you are, right? If for some reason that the buyer that you're dealing with is not buying from any U.S. supplier, we can accept also foreign suppliers, but we prefer U.S. suppliers, of course. In the case in which your buyer is not purchasing from any other country, and you would be their first foreign supplier, then in those type of cases, instead of a trade reference, you can do a credit report. And here in Michigan, actually, we're very fortunate because through the Benandel Global Trade Center, all eligible small businesses can get a free foreign buyer credit report. So you can fulfill this requirement. So anywhere over $100,000 up to $500,000, then we will definitely ask you for that credit report aside from that trade reference. Over $500,000 plus, then we'll ask for credit report, trade reference, and financials, etc. So how do you get started? What would be the next step if you're interested? So first thing, we want to have a meeting with me. Let's discuss what your needs are, what your portfolio is. I'll be able to explain more detail what export credit insurance policy would be more applicable to your needs. You will want also to have a SAM.gov account or unique entity identifier, which is attached to your SAM.gov account. If you don't have that, that's perfectly fine. We have a team at EXIM that can assist you in fulfilling that requirement at no cost to you. But that's, to be able to enter the application, you needing to have a unique entity identifier. And then we will refer you to one of our brokers. So we work with private sector brokers all around the United States. They are independent and they will work for you. We pay their fees, however. So they will assist you with entering an application. They will place you with the best insurance option that you have based on your portfolio. They will help you understand your policy. If underwriting comes back and say, hey, I need more information regarding this buyer, or there's this, this set of questions I have, they will help you understand them and help you address them. And they'll just in general provide ongoing support and expertise. You don't have to already have an expert credit insurance broker. Like I said, we have a network of them, and we'll just assign you one that will work with you. So as always, you can stay connected with us on our social media. We have a blog that you can subscribe to that we share a lot of very good educational content for small business, especially that are exporting. So not only EXIM related, but just in general to help you with your export journey. So it's always a great idea to do that. EXIM.gov has also several videos. We have an educational gallery of videos that you can review, blog posts, etc. So it's great to be subscribed and follow us on all social media to know what we're doing and what's new with us. So thank you so much for allowing me to share with you some information about what we do and how we can help you. And if you have any questions, please feel free to let me know. And here's my contact information.
Wonderful. Thank you, Mariel, for the fantastic presentation. We just have a few questions here in the Q&A. So the first one, is EXIM able to help vet buyers in foreign markets?
Sorry, I couldn't hear you well. Would you mind, please?
So the first question we have is EXIM able to help vet buyers in foreign markets?
Yeah, so we actually can work with the U.S. Department of Commerce if you want to get a background check on a specific buyer, but also, if you're approving them for credit, we will see the credit report. We will do a specific assessment of them as well, done through our underwriting. So if it's not a good buyer, you will know, because we won't be approving credit for them.
Got it. And then one other question. So are there any sales so small that they might not be worth the cost of insuring? Are there sales so small that EXIM won't insure them?
No. Like I said, we help every exporter for every transaction that they have that is not defense or military. So there's no minimum or maximum amount to work with us. And if you have at $1,000 export, you could put a policy on that, and that's the premium is going to be calculated on that specific value. So it's not a set amount. So just to give you an example, if we have a small business multi-buyer policy, and like I said, it's a set schedule, let's say that you're shipping $10,000 to Mexico or to Peru or to Chile, anywhere in the world that we're open for business. For $10,000, up to 60 days of credit that you give to that foreign buyer, your premium is only going to be $55. So it's going to be 0.55% of the value of the invoice under a small business multi-buyer policy.
Okay.
So it doesn't matter what transaction is, we're going to be calculating that percentage based on the receivable. So it's really it's a really very marginal cost compared to the benefits that you're getting. And also, like I said before, pass it to your buyer. There's no reason why you don't have to. So if you know already how much your premium is going to be, tell them that if the price is that you're giving is $900, your premium is going to be $50 or something like that, then that's the invoice you're going to give them, $150, just to simplify it, because you're giving them financing, right? No interest. So it's just fair that you don't have to bear the cost of that.
Yeah, perfect. And then one more question. So can you insure equipment sales for 48 or 60 months?
Yes. Yeah, definitely.
Perfect.
Depends on what equipment is and the value of it. Yes. Like I said, we have no minimum, no maximum transactions.
And then for one more additional question, so in terms of general best practices, like would you recommend, maybe even regardless of how a buyer has been vetted, would you recommend it's always good to, to insure at least the first, several transactions, or I guess, and then maybe you don't need to do it afterwards, or would you just say it's worth kind of insuring everything every time just to mitigate the risk?
So it depends on your risk appetite, right? So if it's the first time you're doing business with this buyer and you want to give them credit, definitely put insurance policy in it. That's a no-brainer. That's going to be taking most of the risk off of your hands. If you continue doing business with them and they are prompt in paying, and you can even give them a little bit more flexibility and give them more days to pay, still covered under insurance, because the idea here is that even though your buyer might be good at paying you and your commercial risk is minimal, you still have the political risk. Remember, most of the countries in the world are not dealing with US dollars and don't have the financial and the political system and stability that the US has. So you never know, right? So they might have issues with the currency. There might be some political problem. There might be some issues with an export or an import license, anything like that. So there's always that issue that is not directly controlled by your buyer. Your buyer might be great and might be, having all the willingness to pay you, but there's always something bigger than a buyer, and that's the whole system where they are doing business, right?
Yeah.
So there's always that component that many actually forget. because they get comfortable. They think, oh, they've been paying me we've been doing business for 10 years, so it's fine. And there's
Yeah.
always the 11th year, right?
Yeah,
I
makes
mean,
total sense.
so yeah, so and like I said, for
Mhm.
if you're very, very open to taking risks, that's perfectly fine. But then you're also missing out on the financial benefit, because as you continue exporting, that buyer is going to say, hey, I don't want you to send me one container now. I want you to send me 2 or 3 containers, right? And then you're going to come to your bank and say, hey, I need to increase my line of credit because I need to get more materials to fulfill this larger order. And your bank is going to say, okay, what can you put as collateral? They're not gonna even look at your foreign receivables. It's too risky for them. They're not gonna take that. So they're gonna factor that out. So you're borrowing against only domestic, right? And whatever you have to as personal guarantee, etc. Right? So you might not be able to get the amount that you need. But if you have those receivables insured, then you are actually increasing your borrowing base. You can borrow more based on those receivables. So those
Makes
two
sense.
key benefits.
Yeah.
And
Wonderful.
like I said, for the price, for what it cost, like I said, for a small business multiplier, 0.55% of a receivable that you're passing to your buyer. I mean, it's really, really huge benefit for minimal cost.
Wonderful. All right. Well, we are about at time. So I don't see any additional questions. So yeah, just want to say a huge thanks once again to Mariel. And we'll be sending a copy of the slides to everyone afterwards. So thank you so much to Mariel, to everyone who attended. Have a great day.